Hi everyone, this is the fifth problem in components of working capital method for estimating the working capital requirement. Let us look into the problem. X Limited is presently operating at 60% level, producing 30,000 units and proposes to increase its capacity utilization in the coming year by 50% over the existing level of production. So now they are producing 30,000 units and they want to increase their capacity by 50%. So 30,000 plus 50% on 30,000, so 15,000 plus 30,000, 45,000 is a new level of production. The following data has been supplied. The unit cost structure of a product at current level: raw material 4, wages is a variable rupees 2, overheads also variable for rupees 2, fixed overheads 1, profit is 3, selling price is 12. Raw materials will remain in stores for 1 month before being issued to production. That means raw material will be there in stores for 1 month. Materials will remain in process for further 1 month. That means work in progress. So it is there in stores for 1 month. Work in progress includes, raw materials, work 100%, wages and overheads are 50%. Then suppliers grant 3-month credit to the company. That means creditors given 3 months credit. Finished goods remain in godown for 1 month. Finished goods are valued based on cost of production. Debtors are allowed credit period of 2 months. So credit debtors are valued on the basis of cost of sales. Average time lag in wages and overhead payments is 1 month. So 1 month period allowed for payment of wages and all the other overheads. Prepare statement showing working capital requirement at the new level. So for new level we need to prepare working capital requirement. New level is 45,000 units. Assuming that minimum cash balance is 19,000 has to be maintained. So cash is the current asset. Under current assets we have to write 19,500 as cash balance. Let's go for it. First we need to calculate the estimated output. Existing output is 30,000 units plus increase in output by 50%. So 30,000 into 50%, 15,000. So new level of output is 45,000 units. Then we need to calculate the overheads for the new level. For current level, variable overhead 30,000 into 2, 60,000. See, variable overhead 2 per unit and total units 30,000. So 30,000 into 2. Then fixed overhead 30,000 and cost per unit is 30,000. So 90,000 is the total overhead at the current level. And for new level, fixed overhead will not change. Variable overhead 45,000, it is a new unit, into rupees 2. So 90,000. Fixed overhead as it is, it will not change because it is a fixed overhead. So 30,000. For new level, overhead is 1,20,000. Next we need to prepare a statement of profitability. So why we are preparing this, calculating this cost of overhead? Because we need to find what is the profit for new level, and we need to deduct that from the sales to get cost of sales. So statement of profitability: sales 45,000 into 12, 5,40,000 minus variable cost, raw material, wages and overheads. So raw material 45,000 into 4, 1,80,000. It is 1,80,000. Okay. Then wages 45,000 into 2, 90,000. Overheads 45,000 into 2, 90,000. Total variable cost is 3,60,000. Deducted from the sales 1,80,000 is contribution less fixed cost or fixed overhead 30,000. So profit is 1,50,000. New profit is 1,50,000. So this amount we need to deduct from the sales to get cost of sales, as it is required for calculating debtors. If there is no selling promotion, sales and promotion expenses, then that only the cost of production. So sales for new level 45,000 into 12, 5,40,000 minus profit 1,50,000. So cost of sales or cost of production is 3,90,000. So this profit we just calculated 1,50,000. So now preparing statement of working capital requirement. So you need to draw 3 columns, particulars in a column and outer column. First you need to write current asset. Under that first one, inventory. Inventory includes raw material, work in progress and finished goods. First we are writing raw material. Raw material per unit cost is 4 and raw material will be there in stores for 1 month. So 45,000 into 4 into 1 by 12 in a column, 15,000. Then work in progress. Second component under inventory is work in progress. It includes 3 things: raw material, labor and all the overheads. Raw material 45,000 into 4, work in progress is in stores for 1 month, right? So 1 by 12, so it is 100%, that means 15,000. Next labor 45,000 into 2, labor is variable, right? So 45,000 into 2 into 1 by 12 into 50%, so 3,750. Next overheads. So this 1,20,000 just be calculated. So at new level, cost of all overhead including fixed and overhead, so 1,20,000 is new level. Cost of overheads is 1,20,000 into, it is there in work in progress is there in stores for 1 month, into 1 by 12 into 50% is 5,000. Next finished goods based on cost of production. What is the cost of production or cost of sales? 3,90,000. So 3,90,000 into 1 by 12, it is 32,500. Total inventory is 71,250. Next finished goods done. Then debtors are valued on the base of cost of sales. Cost of sales amount is 3,90,000. Credit period allowed for debtors is 2 months into 2 by 12. So outer column 65,000. Then cash balance 19,500. It's 19,500 as it is given in a statement, 19,500. So add all the current assets, you will get gross working capital 1,55,750. Deduct all the current liabilities. First one, creditors. Creditors are valued based on raw materials. So cost of raw material per unit is rupees 4. So 45,000 into 4, and credit period allowed by creditors is suppliers anta kodtaralva. So into 3 by 12. Credit period allowed by creditors is 3 months. So 3 by 12, so it is 45,000. Write in our column. Next, outstanding wages. Outstanding wages, it is allowed for 1 month. Cost per unit is 2. So 45,000 into 2 into 1 by 12, 7,500. Next, outstanding overheads. Total overheads 1,20,000 into 1 by 12, 10,000. Total current liability is 62,500 and net working capital is 93,250. Next, problem number 6. The pro forma cost sheet of a company shows the following particulars. Raw materials 70 rupees per unit, direct labor 30, overheads 50, profit 50, total selling price is 200. Raw materials are in stock for 2 months. So raw materials are there in stores for 2 months. Materials are in process on an average for 1 month. That means work in progress are there in stores for 1 month. Finished goods 2 months. Finished goods are valued based on cost of production. Credit allowed by creditors is 2 months. Creditors is calculated based on raw material purchased. Credit allowed to customers, that means credit allowed to debtors is 2 months. The debtors or customers, that is valued on the base of cost of sales. Lag in payment of wages is 1 month. Then lag in payment of overheads is 1 month. 1/4 of output is sold for cash. So 1/4 of the output is sold for cash. Remaining is 3/4 is for credit. So this calculation is needed for debtors calculation. Cash in hand is expected to be 30,000. So cash is 30,000. You are required to prepare statement showing working capital needed to finance level of activity of 50,000 units of production. So 50,000 total units of production is 52,000 and selling price is 200. So we need to find cost of sales. Cost of sales, raw material, direct labor, add overhead. So these are the by these will be getting cost of production, cost of sales, and that is required for finished goods and debtors calculation. So first statement showing working capital computation. Current assets, first we are writing under that cash in hand given in problem 30,000, directly we are writing in outer column. Next debtors, total units 52,000. So from where you get 150? It is see in the question 70 plus 3 30 plus 50. $150 is cost of sales, 70 raw material, wages and overheads. Total cost of production per unit is 150. Okay, so 52,000 into 150 into 2/12 into 3/4. 1/4 is for cash and remaining is for credit sales. So debtors are valued on cost of sales. No, for credit sales amount from debtors calculation we are doing this, right? So 52,000 into 150 into 3/4 into 2/12. Credit period allowed to customers is 2 months, so 2/12. Inventory of raw material. Inventory includes raw material, work in progress, finished goods. So first item is raw material. So look at the question. Raw material, so total 52,000 units and raw material is 70. So 52,000 into 70 and raw materials are there in stores for 2 months. So 52,000 into 70 into 2/12. It is 6,06,667. Next, work in progress includes material, wages and overheads. So material, raw material per unit is 70 and look at the question. Materials are there in stores for 1 month. So 52,000 into 70 into 1/12. It is 3,333. So we are assuming 100% raw material is used. Next, wages. Cost of wages, that is direct labor, is 30. So 52,000 into 30 into process is for 1 month, right? Into 1/12, and we are assuming direct labors are used only 50% in when the materials are there in process. So 52,000 into 30 into 1/12 and 50%. This is the assumption. So total 65,000 is wages. Next, overheads. 52,000 total overhead is 50 rupees 50 and materials are there in stores for 1 month into 50%. We are assuming 50% expenses are incurred when the work is in progress. So 1,08,330. Total work in progress is 4,76,666. Next, finished goods. valued based on the valued based on cost of production and cost of sales are same here, that is 150, 70 plus 30 plus 50. So 52,000 into 150 into 2 by 12, 13 lakh. So total inventory 23 lakh 83,333. So add all the current assets, you are getting gross working capital 33 lakh 88,333 less current liabilities. First one, creditors. Creditors are valued based on raw material purchased and cost of raw material is 70. So 52,000 into 70 and credit period allowed by creditors is 2 months. Suppliers means creditors, so 2 by 12, 6,06,667. Next, login payment, wages 52,000 and per unit cost of wage is 30. So 52,000 into 30 and login payment is 1 month. So 1 into 1 by 12, 1,30,000. Next, outstanding wages done. Next is overhead. Per unit cost of overhead is 50. 50,000 into 50 and outstanding is for 1 month into 1 by 12. So 2,16,666. So total current liabilities 9,53,333. So net working capital is 24,35,000. Thank you.